Hey everyone, now I'm talking with Gray Hall with Evernest Property Management, formerly GK Houses. A few months ago, they rebranded now into Evernest. So great, glad to have you back on the podcast. I'm assuming you're like all the other property managers and you're busy with frozen pipes right now. So I've heard some horror stories. And I appreciate you still giving some data on here.
Yeah,
So
man.
first off, how are you, man?
Good. Glad to be here. Yeah, had a crazy weekend with the low temps in Denver. Had a couple frozen pipes and a bunch of no heats that always seem to surface when you don't want them to. So yeah, we're good. Staying busy.
Good. Now it's been, 2 or 3 months since we did our last property manager update with you. Kind of walk us through like how was everything really since Thanksgiving through Christmas, and now we're at middle of February. Just how is that November to end of January timeframe? Because I know
Yeah.
historically like that's can be some rougher times for rent collection, but now with COVID
Mhm.
that throws a big curveball in there. So what's been going on the last few months?
Yeah, I mean, been pretty consistent. We're typically high 90s on like our total collected rent. Year over year, I was looking at the data in January and February, and we were about 2% less collected. So kind of 2% in the wrong direction. But when you're still talking about 95 to 96%. So kind of overall in the whole portfolio, collections have still been high. So from that regard, things have, still been encouraging. Every month you're kind of checking it and looking to see how it rolls in. And so been encouraged by that because you're right. Around Christmas, people are spending money sometimes on other things besides the rent. So kind of adds another wrench into things. But yeah, collections have been good. We're tracking to be kind of high 90s still.
Okay, so not too much different from last year, but a couple percent lower, but nothing dramatic.
Yeah, I mean, nothing that's kind of raising the red flag. It's kind of the compounding effect of everything going on. You do have a few more tenants who are having issues with employment, but for the majority of our tenants, man, they're working from home. And so kind of depending on, what types of tenants you have in there and kind of what their work from home situation is, and with things kind of slowly starting to open back up, um, you know, not super concerning from our standpoint.
All right. And what about just leasing activity, bumping rents? What are you seeing in the, other
Yeah.
other areas besides rent collection?
So this, yeah, kind of the Thanksgiving to call it into January, February stretch is typically like the worst leasing season. So, what we're seeing is we're not pushing rents a ton. And so we typically do that in the off season, kind of call it the off season leasing. So not pushing rents a ton, trying to get it about where the market was, or at least where it was rented at before, but really advising owners, hey, this is the slowest time of the year. It's the coldest. Not as many people move to Colorado. So we're keeping that in mind. We're doing kind of rent analysis. But just the same things, like downtown condos that are older, kind of those older build condos with less amenities, still really tough to lease. I mean, two of our three longest like days on the market properties are in that area. One's in Cap Hill and one's off Colfax.
What's like these are like the 1960s,
Yeah.
and they like the 2-3 bedroom size stuff.
Yeah, I think we've got a 1-1 and then a 2-1. So on the smaller end, and with people wanting to work from home, have an office, they're just not wanting to pay those prices downtown. Like I was actually looking at our longest property, that 1-1 condo. It was previously rented at 1,600, and we are on the market at 1,295 right now.
Oh,
So
wow.
significant rent drop in order to get the interest there. So you just kind of another, like, single family homes are renting. If you price them right, you can get market rent, and basically all the properties, like when we put single families up, they go really quickly. So all the properties we're still kind of leasing that have been hanging out there are multifamily or apartment type stuff. And so just kind of pricing that in mind. Single families are going to go really quick. People want that space. They're okay to pay lower rents and move outside the city. And so we still got, they're moving. You just got to price them accordingly, and they're sitting out there longer than the single families.
Okay. And in terms of this, like, I'm gonna pivot questions here with you, Gray. So just in terms of like just some general advice to investors out here. So, as interest rates are super low. The long-term fundamentals of Denver look very, very
Yeah.
optimistic, but we're gonna have some choppy times here with, rent collections and changing moratoriums and all this stuff. Like, what advice do you have for people buying investment properties Q1 of 2021? Like, help set some expectations for their finances, their emotions, their
Yeah.
expectations. Like, what would you advise people right now? Like, hey, you're buying a property, which, hey, makes sense, but be prepared for this. Or what would you advise them?
Be conservative on rents. Know kind of what tenant class. If you're in Section 8, you kind of know what that is, but don't try to make a deal work. And we've seen prices increase. don't try to make the deal work and put a rent kind of estimate in there that you're not sure of. The other thing is be wary of buying properties that have tenants already in place. Looking into who approved them, what was their approval criteria. We've seen some stuff with that where you take on a property, great, it's turnkey, instant money. But in this kind of environment of tough to get tenants out and kind of all that stuff in the air, I would be wary of that. And
let me ask you a question on that, because I mean, I see we do a lot of that while we're buying properties, and there's definitely limited data that property managers can share on their screening process for like, hey, the tenant's background. So in those situations, like what advice do you have for us and investors out there?
Yeah, it's a great question. I mean, ideally, if they've been in there for a long time, getting the rent roll. But if you're buying from a mom and pop landlord, a lot of times what we're getting from rental verification is, yes, they live here and yes, they pay on time. So yeah, I mean, it totally is tough, but just take it into consideration where you got to make sure you've got to have the reserves there and kind of plan for worst case. Have the reserves if something does happen and it takes 60 days to get the tenant out of there. And then if you're buying from somebody that's was a management company, asking, did that management company screen it? Did they take it on? Was it a long-term tenant? And then if kind of working with you guys, if you know who they're buying from and kind of trust the the manager or the investor, how they screen their tenants, like that puts you in the best position. But you're totally right. We're not able to give out credit scores and all that kind of stuff. And so it does make it challenging. That's why I kind of throw it out there of do a little bit more research, ask as many questions as you can. You can't get all the information, but be prepared if the tenant is freshly in there and you don't have track record, or kind of depending on the class, just kind of be prepared for, if there is, rent collection issues, kind of have that to be able to cover that.
All right. Good to know. And I kind of cut you off there. I think, were you going to mention one or two other items? Or did you lose your train of thought?
Just, it's super competitive out there. I mean, if y'all come across a lot of off-market properties, being able to get people those kind of deals. So working with somebody who has that off-market access, maybe it's an investor who just wants to offload the property, that kind of puts you in a good position to find a deal. It doesn't necessarily once you have the deal, but y'all are working hard to kind of find all these off-market leads. And so, working with somebody who can help find you those.
Well, we're like everyone. We all need more inventory. So,
that's right, man. It's crazy out there.
Yeah. Cool. So, but overall, no cliffs in horizon that we're about to drive off of, you think?
I just don't see it. I really just don't. I mean, long-term still believe in Denver, and hey, we're collecting 96% of rent. So we're talking about kind of really small percentage chances that you need to factor in when you're looking at a property. But overall, I would look at our collection numbers and our median days on market. We're finding tenants within 20 days. So price it right. Don't, push the rents right now and, find quality tenants, make sure whoever's screening them, if you're screening it yourself, make sure you've got a really good set process. Or if you're using a management company, that they are, checking unemployment, making sure that their hours haven't dropped, making sure that any kind of new regulations coming out, checking with previous landlords, did they pick up and leave because they couldn't pay the rent, like all those kind of things. So that's kind of the short term, but long term, I mean, shoot, it's great to be in the Denver and kind of all along the Front Range.
Great. As always, man. I appreciate it. Thank you.
Enjoyed it, Chris. Enjoyed it. Thank you, man.
All right. So this is Gray Hall with Evernest. And of course, the link and contact details in the show notes. Thanks, Gray.
Awesome. Thanks, Chris.